Good morning. Welcome to the Brownfield Ag News Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets, University of Missouri, Scott Brown. Good morning, Scott.
Good morning, Megan.
Not a creature was stirring except for an economist and a market reporter on this Friday morning. It is the Friday before Christmas. Merry Christmas Eve and Merry Christmas to everybody. Markets are closed today, but we had a pretty big day yesterday with reports, so we opted to talk this morning instead. So let's kick things off and recap what happened this week in the markets.
Yeah, so on the cattle side this week, Megan, we saw cash cattle that were down about $1.60. Those feeder cattle markets, they really didn't get tested this week as we're in that shortened holiday week. So nothing to report on that front. The February live cattle futures contract closed up $3.10, and the January feeder cattle futures contract was up $3.15 on the week. The choice box beef price was basically unchanged on the week as weakness in ribs offset what was strength really in the rest of those components in the box beef. On the hog side, cash barrel and gilts were up about 70 cents this week. That February lean hog futures contract closed up $2.60, and the pork cutout value lost 65 cents this week as bellies and hams were both weaker.
You mentioned pretty much light trade volumes, light test this week. This is kind of going to be the story this week and next week as well, I'm assuming, with the way the holidays are.
Yeah, that's correct. And as we get into the reports, I don't think any of those reports really gave us any big news to get folks excited to trade between now and the end of the year. So I expect we're going to stay pretty light here for the remainder of 2021.
Normally we talk weekly slaughter numbers. Those weren't released due to the close this week, and that'll kind of all catch up with us, I think, on Monday. So let's get right into those report. Cold storage is what kicked us off this week, and really kind of continuing a little bit of a lower trend.
Yeah, that's right. When you look generally, red meat supplies continued to weaken relative to the previous year. Total beef ending stocks and freezers at the end of November was down 3.5% of where it was a year ago. On the pork side, we saw total pork ending stocks down about 3% relative to a year ago. We can look in some of those components, boneless hams, for example, down nearly 12%. But we did see bellies up 8.2% relative to a year ago. So little mixed bag on the individual components there in that pork ending stock number. I think the surprise was actually the cut in chicken and turkey ending stocks that we saw in this report. It was lowest turkey stock since 1985, and the cut in chicken stocks was the smallest month since November of 2011. So tighten things up on the poultry side this report.
Livestock slaughter, as we take a look at those numbers, kind of interesting when you look at just how things have fleshed out through this year.
Yeah, that's right. I keep saying same song we've sung most of 2021 when it comes to livestock slaughter. When we look at cattle slaughter, we're up 3.4% for the first 11 months of 2021. We did get cattle dressed weights that are down 0.5% for the first 11 months of 2021. So overall beef production up 2.9%. We won't get to talk about that as we get into 2022, Megan, as I believe we'll start to see cattle slaughter start to run closer to year ago levels and below as we get further into 2022. So some good news on the supply side there on cattle coming. On the hog side, as we talk about less hog slaughter as we have most of the year, hog slaughter down 1.7% for the first 11 months of 2021. And we also saw a 0.5% cut in hog dressed weights. So overall pork production 2% lower than a year ago. I think all of that just spells some optimism here in the short run as again, we continue to talk about shorter numbers of hogs relative to where we've been the last couple of years.
And we'll get into that as we talk about this quarterly hogs and pigs report that came out yesterday. when we look at the total hogs and pigs and we see some contraction again or less numbers, how does that set us up for the first part of 2022? And potentially, does that maybe see some expansion then in the latter half of the year?
So perhaps, yeah. So hogs and pigs, I think the biggest story we got here was those inventories 120 plus. So some of the heavier weight categories that actually fell outside the bottom end of the pre-report estimate. So we're tighter than I think many of us would have thought here. I think that spells some opportunity for optimism the first few months of 2022. And I keep reminding folks, when you look at what USDA said in the last WASDE, down a couple percent in pork production the first couple of quarters of 2022, that could give us some price strength as we move forward.
But don't you always say the cure for high prices is high prices?
So it is. That extension adage always holds at some point down the road. However, I'll say feed costs are going to factor in, other costs are going to factor in. I think there's still producers looking at the processing side of the industry going, it's more than shackle space today that matters. You know, what's the labor availability going to be like as I get into 2022? So a lot of uncertainty that I think might keep us a little more in check. You know, as we look at the numbers on the breeding side, we came in that hogs and pigs report right at pre-report average, just at year ago levels in terms of breeding inventory. So we haven't really built yet. If we plant a lot of corn and get corn prices lower, second half of 2022 could spell more pork supplies than your and I's conversation suggests this morning.
How much is that labor factor going to play a role as we look into 2022 and beyond? I mean, we think about just the ability to process and to have a workforce and a labor force that's accessible and there.
Yeah, so I think we're going to continue to grapple with what that labor issue going forward here for a period of time. Whether or not we can find more labor to get in those plants, I think is a tall order at this point in time. I think you're going to find the continued use of automation trying to help offset some of the labor issues. But for me, Megan, we're going to have to do more than count shackle space as we think about what the absolute maximum level of slaughter can be. It's shackle space and available labor that's going to matter in these discussions going forward. So even though we might have the shackle space, we might not be able to get to 100% capacity in terms of slaughter. So we'll wait and see. But I think this is one we get to deal with for a while. I will say there's economic incentive to try to solve this problem. And I think that might help us alleviate some of the bottlenecks as we get further into 2022 and on into 2023.
All right, last report from this week, and there was a big one for reports. Cattle on feed. And as we take a look at those numbers, kind of not an exciting report there either.
Yeah, so a little bit of a sleeper relative to pre-report estimates. We continue to kind of stay on track with what's been happening of late. So December 1 on feed numbers came in at 99.6 of a year ago. That was right near the pre-report average. Cattle placements in November came in at 103.6. The midpoint was 103.8 pre-report. So on both sides, we're not seeing much unanticipated out of that report. So hopefully that doesn't give us any negative, and in fact, just says we're continued to set up for the story that we've been talking about for much of the latter half of this year, at least. So we do see some November placements of lighter weight cattle into the feed yard, which to me maybe continues to remind us that some of the drought areas have sent cattle earlier. So perhaps once that those cattle get through the system, we'll talk about even tighter supplies than you and I have already discussed as we get further into 2022.
That kind of sets the stage for some reasons to be pretty positive about beef prices in the new year.
Let's not jinx folks, but there seems to be maybe a fairly good present under the tree this year as we look ahead into 2023 for cattle. And we've already seen that in prices, right? As we've seen cash cattle prices that have moved higher. I just think there's an opportunity for those to continue to move higher as long as the demand side sticks with us, both internationally as well as domestic beef demand. But fewer numbers, I think certainly helps on the cattle side. And we know we're going to start at least probably the first half of 2022 with less pork supplies as well. So we're really set up well on the supply side. Now we just need the demand to continue to hang with us.
And hopefully that gets to be the next big present under the tree for red meat production and red meat prices here in the U.S.
And we certainly haven't seen any signs of demand not hanging with us, but I always say there are risks on both sides of this equation, and I sure don't want to lose the strong demand that we've seen in 2021.
Scott, that'll do it for us this week. Kind of a quiet week next week, and I think maybe we'll take a look back at a few of the big stories from 2021 that we've talked about, and maybe take a look ahead as well.
Yeah, so it's only Restaurant Performance Index that we get out next week to finish the year, Megan.
All right. Have a great weekend. Have a Merry Christmas, and we will talk to you next Friday.
Likewise, Megan.
To our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments and subscribe while you're there. And if you're looking for some great content while you're on the road, Brownfield's Year in Review program is up on our website, and you can find a link to that at brownfieldagnews.com. Have a great weekend. Have a very Merry Christmas, and we will talk to you next Friday. I'm Megan Grebner for Brownfield.